Good afternoon. This is Keith Brown with Commodity Consulting in Moultrie, Georgia, with some commentary for Tuesday. It's about 3:15 Eastern Time. All the markets took a big slam today. Cotton, corn, beans, wheat, fuels, which is a good thing. Crude oil sharply lower today, simply because I think the U.S. dollar really pumped up today. The dollar looks very strong. I think it'll stay strong. And, of course, the reason for that is everybody else is in bad shape. And by that I mean this. Already the Federal Reserve is talking about raising interest rates in this country because they feel like the numbers, the data is telling them the economy is improving. Now, your personal economy may not be improving like mine, but numbers-wise, I guess it is. When you look to Europe, though, Europe is just now instigating this quantitative easing thing, the buying of debt, the thing that our own Federal Reserve did in the last 2 or 3 years. And then when you look out to China, China's been on a campaign to lower interest rates and banking rates there to stimulate her economy. So the world's lagging us. And so as the world pumps money into the dollar goes up, and it certainly scrunches, commodities. Cotton in particular took a big hit today. And, of course, seasonally cotton should be starting to peak out up in here. Corn, beans, particularly wheat today took a big hit, despite the fact of the adverse weather that caused wheat to rally up yesterday. Wheat went to 532, I believe, yesterday, or 530, but it had big resistance up there and certainly turned back down again. So this is sort of a general overview of what's sort of cooking. So it's the financials, that is to say, the dollar. Versus everything else. You look at the financials, and the stock market made all-time highs, and everybody seems to think that's fabulous. But what's happening is, because commodities are cheap, and the housing market's not very good, although we got a good housing starts number today, and CD interest rates are virtually nil, the stock market is vacuuming out all the money. And so the stock market's artificially high, and that's certainly putting pressure on commodities. But all that to say, this pendulum will swing the other way. We probably have some more upside in this dollar for a little while, maybe into early June, middle of June. And then we could start to see, the ag market start to perk back up. We're washing out the ag markets. Those numbers, those prices are cheap, and we're seeing some farmers, unfortunately, have to fold their operations, but that's kind of the way it's shaking out. If you have any questions or comments, give us a call at 1-800-910-1910. Thanks for listening.